What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did get that bullish breakout with a strong bounce, and remember we were looking for this bounce from that trend reversal. Where do we go now that we did have this strong bullish breakout? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, first things first, I want all of you to be nice to each other in the comment section. Feel free to insult me as much as you want, but be nice to each other. Second of all, let's switch SPY over to a monthly chart for all of you that keep thinking that I'm just a permabull, and look at all of these green candlesticks on the monthly chart of SPY and tell me which side of the trade that you wish you were on. The only red candlestick we have on the monthly chart is September, which I did nickname September, and I did tell you to get ready for a stock market correction. If you're looking for any perma bears to follow, I think there's a list of them in chapter 11. Alright, now that we got that out of the way, let's jump back over to the daily chart, and you can see we clearly did get a very bullish breakout look today with a very impulsive move to the upside. And on the daily chart, we are now forming a higher high after forming a higher low. Remember, on the 1 hour chart, we've been looking for this bullish reversal condition, and now we're starting to see it on the daily chart as well. Price action's back above the moving averages, and today we got two bullish breakouts, back above the resistance trend line, breaking out above 436 with a gap up, and also breaking above 438, which is our 50 EMA. So SPY is looking extremely bullish in just one bullish day, and you can tell from this candlestick closing at the high of the day after a monster gap up that this was a very impulsive rally move, which means you don't want to ignore it because it is telling us the direction of the market. So strong resistance from here will be at SPY levels of 444 and right around 446. Watch those levels because we could be due for a little bit of a cool down after this pullback, and we still do have a gap below at 436. However, the bulls have the advantage of not needing to close that gap because the bulls now have strong support right around 438, which is the top of that gap and the 50 EMA. So don't just assume that gap has to get filled. Gaps typically get filled, but there's no guarantee when they will get filled. And right now, the bulls want that gap to stay open as long as humanly possible. Even if we do go back to 436, that's still going to be a higher low because our last low was right around 433. So remember, the bulls take the stairs up and the bears try to take the elevator down. So don't worry about the volume being low. You want low volume as you take the stairs up, and you want high volume on the elevator down. Low volume selling is nothing to be panicked about, and that's why I was telling you the last few days that the low volume selling was actually a buying opportunity before we got this impulsive rally. The other thing I want you to pay attention to is the weekly chart, because even though this candlestick doesn't close until the end of the day tomorrow, you can see the weekly chart is looking extremely bullish. Remember, I said you can't judge the weekly chart until the end of the day on Friday, and we're only one day away from knowing where this candlestick is going to close, and currently it looks like the candlestick is going to close near the high of the week. We can see we're back above that critical support at 437, and we did not lose the bull trend. So on a macro level view, you are still in a bull market, and the daily chart is starting to also go back bullish as well. So follow the price action because we already know the trend is bullish on the weekly chart unless we close the week below 437, which is still a possibility. It's just highly unlikely at this time. So you know if strong support is at 437, it's very unlikely the bears are going to be able to close that gap at 436. So 438 and 437 will be strong support. So it's very likely we don't fully close the gap below. So don't just buy puts thinking that gap is going to fill. Otherwise, you're going to continue to lose money because we're not likely going to fill that gap at this time. It's very likely going to fill in the next stock market correction. And if we're going into another bull cycle, that is not the time to be looking at that gap. So look for downside support at 441 and 438 and 437 because that will be the weekly support, which we could still see form a higher low on the daily chart. Jumping over to the hourly chart, we will do a quick update because we have been looking for this, but remember we were looking for the higher low situation and we were waiting to see if we were going to get a higher high, and with today's price action, we did get that breakout look. There were some questions in the comments of why do you look at the 1 hour chart? So if you didn't know, well now you know. Jumping over to the NASDAQ 100 triple Qs, we were up 1.84%, and again we see a very bullish day on the triple Qs. We gapped up and created a gap that won't close until we get back down to 360.6, and we did break out and close back above the 50 EMA. So in just one swift candlestick, we saw the QQQ bulls blasting out above 360, 363, and 365 all in one day, so the bulls are taking the elevator up. We still do have that gap above at 367.7 on the triple Qs, and it's very likely that gap is about to be filled in the very near future. If we blast through that gap, you're looking for resistance at 371 and 373, And remember, it's very likely we finished out this ABC correction and we're going back into another bull cycle, which means the triple Qs could easily start impulsing higher and we possibly could see a brand new all-time high this year. You cannot rule out an all-time high when you're getting this ABC textbook correction pattern, because after a correction, you go back to the macro level trend. And we already know, looking at the weekly chart, the triple Qs are still in a macro level bull market. The weekly level on the triple Qs to watch is a close above 362, and the triple Qs are currently sitting above 366. So we do know there's a very good probability the triple Qs are going to maintain the bullish trend on the weekly chart. So jumping back over to the daily chart, look for strong support on the triple Qs at 365 and our 20 simple moving average at 363, which is also the top of the gap below. Even if the bears are able to get the triple Q bulls back down to the gap close at 360, that's still going to be a higher low because the last low is at 357. So remember, the bulls are taking the stairs up, so continue to look for higher highs and higher low conditions as the bulls try to reverse the bearish trend. Jumping over to the Dow Jones, we were up 1.52% on the Dow Jones, breaking and closing back above that critical resistance at 348. And as you can tell, this is another higher high on the daily chart. So you can see bullish price action across the indices, and you can see the Dow Jones is starting to reverse some of the bearish trending, with all of the moving averages still in no man's land with no trend for the bears or the bulls. The Dow Jones now has support at 348, 346, the 20 simple moving average at 344, and the strong support right around 341.8. So the bulls are taking back control of the price action, and the bulls are back over the 50 EMA on SPY, the triple Qs, and the Dow Jones. Look for upside resistance at 351 and 355. On the Russell 2000, we were up 1.48% today, and we see the Russell 2000 closing right on top of our resistance trend line right around 226. Remember, if we see the Russell 2000 breaking and closing back above 227, we're very likely going to see the Russell 2000 finally going back into a bull market. We're developing a lot of bullish trending, and a breakout above 227 and regaining the full bull trend, we should see the Russell 2000 running possibly to brand new all-time highs. We did open this gap below, so we will need to look for that possible gap close, which will close right around 222.8. We still have support at 224 and 222, and as long as the Russell 2000 is staying above 222, we should start to see a lot more bullish momentum building up in the small caps. So look for strong resistance at 227, the breakout level above 226, and above that we have resistance at 230 and 233. To the downside, look for support at 224, 222, and our support trend line right around 220. On the Arkk ETF, we did have a bullish day, closing up 1.9% higher and closing 8 cents above our critical level at 115.5. I think this is way too close to call, but technically speaking, we could be invalidating the double top pattern, which had a price target down here at 102. So in my opinion, I would wait until Arkk can decisively break back above that 50 EMA before I get overly bullish. However, this does classify as an invalidation of the double top. I'm just not quite sure I trust Arkk until it can get back above that 50 EMA, which is basically at 116.4. We did open a gap below, so look for that support to the downside right around 113.5, which would close the gap. And that's also a strong support level at that 20 simple moving average. We also have support at 112.7 and 109. Otherwise, look for that price target down there at 102 if we can't hold above these critical support levels. To the upside, look for that resistance at the 50 EMA at 116.4, 120, and 123. On the VIX, we were down over 9.5% today, so we continue to see the VIX getting crushed. We did open a gap above, so we could see the VIX going back up to about 18.4 to fill that gap. Remember, if the VIX is getting crushed below 18.2, you want to get a lot more bullish. And as you can see, the VIX was below 18.2 all day today, and we continue to see the bull rally going on and on and on. We're getting back down to that support trend line right around 16.6. So if the VIX blasts through that level and starts heading back down towards 14, that's going to be extremely bullish, and we could see a brand new all-time high. If we see the VIX bouncing off support at 16.6, look for that gap close above at 18.5. And remember, if the VIX breaks back out above 20, we could still have more downside, but right now it's looking like the bulls are taking over and the VIX is starting to resemble that. On Bitcoin, we're currently up about 0.25%, and we see Bitcoin getting very close to my price target just below 59,000. We still have bullish price action above all the moving averages and the strong bull trend, and if we break out above 59,000, look for my price targets at 67,000 and 75,000. As long as Bitcoin is above 48,000, I think you need to stay on this bull, and we still do have support at 52,700, 51,000, and 48,000. So watch those support levels, and with the full bull trend, you can buy the dip off support on Bitcoin. On Amazon stock, we close up about 0.5% higher, but we're still closing below that critical level at 33.11. Remember, I want to see Amazon getting back above 33.11 before we look for that gap close at 34.52 and 35.80. If Amazon gets rejected at 33.11, we could still come back down for a potential double bottom look off of 31.85 or go down for that next leg lower at 31.36. So watch that critical level at 33.11 because it's going to tell you which of these three scenarios is likely going to play out. Watch the price action and let it do all the talking. And if we could break out above that level and start running, you can get a lot more bullish on Amazon to go close those gaps above, which would be a very great long trade. Otherwise, look for that next leg lower and potential double bottom look. On Tesla stock, we were up 0.89% today, and we still see Tesla looking very bullish. The price action is still above all the moving averages, and we still have the very strong bull trend with the price target up there at 825. Remember, above 825, we're likely going back up to the previous all-time high and testing the breakout level to potentially go to a brand new all-time high. To the downside, you have support at 800, our 20 simple moving average at 780, and below that, look for support at 765 and the 50 EMA right around 749. As long as Tesla is above this 20 simple moving average and in the full bull trend, I do think we're very likely going to attempt to break out to a brand new all-time high. But don't forget that earnings is just around the corner on October 20th. On Apple stock, we had a very bullish day today, going up over 2% and closing back above the 20 simple moving average and breaking out above that resistance level at 142. We got the strong bounce off support at 139, and this is very close to looking like a double bottom if we can break this neckline right around 144. On a bullish breakout above 145, we have the confirmed double bottom, and we're very likely getting a bullish breakout on Apple stock, which could take us all the way back into the 150s. So remember, if Apple starts breaking out above 145, that's only going to confirm our thesis that we are going back into a bull cycle, and the rest of the stock market is getting back on the bull. Look for downside support at 142, 139, and below that, look for the gap close at 137. On the financial sector, we were up 1.67% today, and we still see the financial sector with bullish price action and the full bull trend. On the industrial sector, we had a very bullish day, going up 1.89% and closing back above the 50 EMA, so we could see the industrial sector reversing the bearish trend and getting ready to go back into another bull cycle. On the healthcare sector, we saw a strong bounce today, going up 1.43% today, and we're starting to look like we could have this potential double bottom look. Look for the breakout above the neckline around 128, and we could see the healthcare sector getting back above the 50 EMA and getting out of this bearish trend. On the energy sector, we were up 1.22% today, and we still see the energy sector with full bull price action and a very strong full bull trend. So jumping back over to the S&P 500, this is without a doubt a very strong bullish breakout. Block out all the noise and let the price action do all the talking like I constantly tell you to do. The noise is just noise. You cannot deny what the price action is telling us, and that's why we're constantly on the right side of the trade. Don't worry about any noise about how this breakout didn't have enough volume behind it or yada yada yada. This is bullish price action no matter how you look at it, and we could very likely be getting ready to go back into another bull cycle. Still watch critical support below, because if we do start breaking critical support, you still do need to be cautious of more downside. But right now, the advantage is in the hand of the bulls, and the bears are likely going back into hibernation. Also, don't forget I do have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and I think with the current market condition, now is the best time to be a BANC member. I'm also running a 50% off promotion code for your first month, so now could be the best time to try out BANC Trade Alerts. You can find out all the details and how to join by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.